Okay guys, what is gold doing? What's gold going to do? What's the next move for gold? Welcome back to my channel guys. In this video we're going to be analyzing the charts of gold. We're going to start with the weekly down to the daily and to the 4-hour time frame. We're going to show clearly how to analyze a gold chart and determine the direction for the next move. Now looking at my chart, we can see on the weekly time frame that the price has kind of been in an uptrend, as we can see here, like so, right? The price has been making higher highs up until higher highs. Oh, sorry guys. Okay, so higher highs up until this area, and it's been having difficulty breaking this zone. Serious difficulty. So it came down, went again, came back, went again, and now it's headed there. Is it going to break, or is it going to still respect the zone? Let's find out. So guys, it's very easy. If you look in, let's see how the price moved right from this area. In fact, just at a glance, I think the gold price just respected the 50% Fibonacci. Absolutely. You see how we respected this area? You get it, right? But we'll just keep that at the back of our minds. Now the price has fallen down the trend up to the middle of the zone. Remember I told you in our last video, in previous videos, that the market moves from zone to zones, and sometimes some of these pairs, some of these charts, some of these prices respect the 50% of the zone. In other words, from this zone to this zone, the market tends to respect 50% of it for some of them, and gold is one of those that do that. Right? We see how it respects here. See how it respects here. Let me show you some more. See how it respects here. See how it respects here. See how it respects here. See how it goes up and still comes down from there. You get it, right? So it means that level is a significant level. See how it also comes down and goes up from here. Right? See how it struggles to pass this place. You get it? Even when it comes down and passes, it still goes back to test it and falls. So gold is respecting the 50% of the zone, of this very zone, and coincidentally that's where the 50% Fibonacci is as well for this very move right now, as we can see. Okay, let's just quickly change this to see, just to make it more visible. To change it to blue. No, blue. Cool. Okay, nice. So you can see how it's respecting this area, right? Okay, so what is it obviously doing now? It has respected here and it's going back up to test this area. That in itself is a trade signal, guys. Already that's already a trade signal. The price is already headed up here, but that doesn't mean you should jump here. Hold on, don't leave yet. That doesn't mean you should go and jump into the trade. Nope. No. You have to calculate your risks and look for a good position to jump in. So once it gets to this area, now look at this. For our smart money traders, right, this is a very juicy part. Up here, there's liquidity up here, right? So most likely what's going to happen is the price of gold is going to induce buyers. So it's going to come up and break out of this. It's going to do a fake breakout from that area and then come back down. Most likely that's what gold is going to do, because it's going to grab liquidity from this area. and then come back down. And it could even worsen it comes back down and then goes back inside up again, and then begins to go up to whatever new highs it wants to create, because that's the highest high it's going to get to, right? Now, if it doesn't do that, I have a good feeling that it's going to go and grab liquidity before it eventually goes down, if it's going to go down. So how can you prepare for the chart? How can you prepare for this? Let's see what we'll find on the daily time frame. Okay, nothing so different. Let's look at the 4-hour. How can you prepare for that, guys? Now on the 4-hour time frame, what you're going to do is to wait for the price. Okay, I think this is even a good place to buy right now. So for those of you who want to buy, you could buy here and then put a stop loss just below this. And is that a good risk to reward? 1:1. Oh, nah. It's not enticing enough for me. So I'm going to let that go. Unless if the price comes a little bit lower, so we will have a good risk to reward. Alright, but if that doesn't happen, we'll let that go. And we're not really trading this, that's not our strategy anyway, just for those who would want to make some extra bucks while it's going up. So what you can do is to wait for the price to hit this level. Once it hits this blue zone over here, we watch how the price reacts to it. Okay, we're not just going to jump into a sell trade, or since HFX said we should buy, it's going to be no. You're going to have to allow the market to give you clues that it's ready to move in a certain direction. All you need to do is just position yourself in the flow of that direction. It's easier to flow with the river than to anti-flow the river. You get it, right? So we're going to wait. Once it gets here, we expect to see some price action before it falls. Now listen, this is very important. If it gets to this point, right, to this zone, and immediately retests and then starts falling after a price action confirmation, when you enter your trade, this is very important now, because the market is most likely going to play with our emotions. Make sure you put your stop loss, give it some buffer. Don't just put your stop loss here. Don't put a tight stop loss. Give it some buffer. One of the best things you could do is to use the 80 arrow indicator. Right? It's been quite a long time we used that anyway. Well, use the 80 arrow indicator to measure the necessary space you require, right, for your stop loss. All right. Then you can then enter the trade, and you should have a good reward to risk down up to this area. Again, that should be your first take profit level. So you are going to be closely watching gold, and then the second level would be this area. We're going to be closely watching gold, guys. Then if it breaks up, personally I wouldn't want it to break up and continue going up, because there is nowhere that's going to be the high. There's nowhere for us to put our take profits. We are not sure where to put our take profit. There's no zone up here. There's no other level up here, unless you're going to use the Fibonacci extension tool. Let's quickly get that up. Fibonacci extension tool that could help you with this. So we have here to here, down back to here. So what you can do is, now I just showed you how to draw a fib. Use Fibonacci extension tool. This is the A, this is the B, and it comes back to the entry. Drag it back to the entry. So already we find that trying to delete this. Okay, cool. So we immediately find that price sat in between the 50% level, and if it breaks up, where it's headed for next is this level. Very simple, right? As a matter of fact, let's put our line there for an indication. So that's where the market is going to. If it's going to go up, if it confirms to us that it wants to break up, in other words, it breaks up, grabs liquidity, comes back down, and then goes up again, we know it's headed to that area. Alright, but if it just goes up and then comes back below, if it goes up here and then comes back below the resistance level, then we look for sell trades back. It nullifies the fib extension. But if it breaks and confirms it's ready to go up, then our first level target is there. Do you get it? Yeah, so we're going to be watching this to see how the price plays out. I'm going to be watching this to see how the price plays out. Alright guys, I'll see you guys in the next video. Peace out.